Hello, guys. Welcome back to the channel. This is Jodaf Trading Journey. I had a person request that I do a video showing exactly how analyses are made and how I use the higher time frames, that is the monthly, weekly, daily, and the H4 to determine how and where I'm going to enter on my trade. Okay, so let's open a full new chart. Let's look at NZD or let's look at USD CAD. Okay, let's delete everything. As you can see, there are some objects drawn. We shall redraw them together. Okay, so let's remove 5 drawings, remove 3 drawings. Why are they not going? I think they are locked. Okay, so let's first of all unlock them. The reason why I lock them is for me to not, you know, by mistake delete them. So let me remove everything. Okay, so now we have this particular chart. Actually, let's remove even this moving average right here so that I can show you how this moving average actually help. Okay, they work the same either you're using a phone or a laptop. They are all the same. Okay, so once you open up a market like this one, um, this is what you get to see: a plain chart with either red or a red and green or whatever color code you have chosen. So this color code actually shows you where the market is going. If a candle is red, then that means that this candle right here was opened here and closed right there. That is a selling candle or a bearish candle. With this candle right here being green, that means it was opened up right there and closed up here. It was once up here, so that's why it has a wick, but it was opened here, closed here. That's why it's green. That means it's a bullish candle. Bullish, 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 bullish. This means that the market was going up, then going down, up, down, up, down, up, like that. So the market is never constant. It's always ever moving. Okay. So, by that logic, this is how trading works. Basically, you are trying to catch a small movement in the market where you get to ride the price from this point all the way to up there. By doing that, you eating this, you getting to enjoy this small change in price, but with a different, with a given catch where you have when where where if you buy a huge lot, then you get a lot of money. It's the same thing as buying. Maybe let me explain it like this. Let's say you are selling boxes. Okay, for each box you get to have a price difference of maybe 10, right? Like uh 10, I don't know what to use, shillings, dollars. Let's use dollars. Okay, so for every box, you get to uh, enjoy a price difference of $10. So that means once you sell one box, your profit will be just $10. Okay, so let's add a text right there. It will be only about $10. But if you had, let's say, you had 10 boxes as such, you had 10 boxes. Let's clone this one, and again let's clone it, again let's clone it. Let's say you had all these boxes. Okay, then no longer your profit will be $10 since you have more than one box. Okay, so this means that for you having 4 boxes, you'll have about 40. It's the same thing as just taking uh, uh, one multiplied by whatever amount you have. This is basically the lot. All right, that's the lot. Okay, so remove objects. So now we go back to the chart right here. Now, how do I know where to buy or sell? Okay, as you can see right here on the market, you'll find that certain prices where the market bought. That is, the market came down, as you can see. Let's look at this one. The market came from all the way up here, sold, but got to a certain price where the market started buying. But then the market came back to that price again. What happened? It bought again. And then again, the market got to exactly where it got last time when it bought, and sold again. But now again to the previous level. So this is why you find people drawing lines and calling them support and resistance. Okay, different. This now right here, this is a support. Since the market came down, got support right there and bought. This now is a resistance. The market got to this point, didn't get above it, so it resisted and went back down. Got another support, went back up. Got another resistance, went back down. And until we broke that resistance. And look at this, guys. Once we broke this resistance, we found support from the previous resistance. Note that this was support when the market was trending, right? This was support. But now, since the market have broken above, it has broken above this uh, resistance, yes, it has immediately turned to support. Where now the market comes back, find support on where the resistance was. And look at that, it bought. And again, it came back again to the same resistance, which that is now the support. We call it resistance stand support. Okay, so that's basically how I trade. I look for these prices where the market seemed to have either found support or resistance. All right, so now how do I choose my support and resistance? Because don't forget, there are so many. There are so many in the market. Whenever you open a market, you can clearly see them. There are so many. This is support. I acted like resistance, but then got broken. So it's always on the markets. So now how I choose my support and resistance, I like to choose them. I like to draw them from the higher time frame. That is where the higher time frame comes in. Okay, higher time frames are much better to have to draw your supports and resistance on them because they hold more meaning. By that I mean, whenever the market comes to a support that is on the weekly, you will find the market buying or selling. Okay, so for example, this market right here, if you were to look at the huge time frame on the monthly chart, you can clearly see that we are uptrending. Okay, by uptrending I mean we are forming higher highs and higher lows. Like this was a low, we formed a high, another higher low, another high, another higher low. Basically, if I was to draw this now, if I was to change this to a line graph, you'll actually see what I mean. Look at this. The market came down, up, again down, up, but this time we formed a much higher high and then another higher low. This was a low, but this is a higher low. The same thing kept going on and on and on until where we are right now. So by looking at the monthly chart, what I'm trying to do by looking at the monthly chart, I'm trying to figure out where is the general direction of the market. Once I have the general direction, what now I'm looking for is the specific entries. Where do I enter? And that is where the weekly chart comes in. Okay, so for now, let's draw our first resistance and supports on the monthly chart. And as you can see, there is this monthly resistance right there where we find that the market came in. We can actually see that it has touched several times. You try to equate it to as best as you can. Okay, so we have seen the market come here, sell, again came, sell, came in, sell, sell, and again once we broke above it, we retested it and we we're buying. And if you can see, the market is right at that point. And since we are forming higher highs, obviously you would expect that the market will start buying from here. You don't buy immediately. That is where you go down now to the weekly chart and try to refine your levels and also entries. Okay, so as you can see, this is a very rigid area where we can see that in this small zone right there, the market has been buying and selling. Now we go back to the candlestick format. As you can see, we are currently on that zone. So what we shall be waiting on is for the market to show us that now it will start buying. And that is where you go back now to the daily charts and the H4 charts to look for entry. Another way you can see how the market is acting is by adding these things called indicators. What I like to use is the simple moving average. I like to use two. So let's add two simple moving averages. Um, I want to add a simple moving average. Okay. All right. Seems like we have two already. Also, here they are. So we set them up like this. I like the 20 moving average. This shows how generally the market has been moving over the last 20 days or whatever 20 candles you're using. So I like to use low and high. Okay. Since they kind of give me a clear direction on what we are expecting. So also this one, I turn it to 20 and low like that. And okay. So for the other one, I don't know how I'm not seeing it. Oh yeah, there it is. So we have our moving averages, as you can see. So what now I'll be waiting for this market is for the market. Yes, I know it will buy from here, but I'm not going to buy immediately. What I'm going to wait for is for the market to come back again above this moving average. As you can see, whenever we are above the moving average, as you can see, let me draw this. Whenever the price is above the moving average, that is, whenever the price is above it, we are buying. And as you can see, whenever we were above it, we were buying. But when we are below it, we are selling. So by that analogy, you can actually clearly see that right now the market is below the moving average. So you buying here will be just like catching a falling knife. So what I would advise is wait for the knife to finish falling until you buy. So and that is how you use the higher time frames and indicators.